What's up, everyone? My name's Robbie. This is Robbie Manila, and today we're talking about stocks that you could buy and hold forever. Well, let's just say there is a lot to go over in this video. I think this is going to be a really good one, and I want to make sure that I define what I'm doing in this video before we kind of jump into it. So what I did was I picked stocks that are only mega cap stocks. Why did I do that? Because this video is going to be just focused on the stocks, mega cap stocks you could potentially buy and hold forever. And then I'm going to do one on large cap stocks, I'll do it on mid, I'll do it on small. So we'll do different videos on stocks to potentially hold forever. And this one is more geared towards growth stocks, growth mega cap stocks. I'll also do a dividend stock video to potentially hold forever as well. Let's go ahead and let's just get this thing started. Before we begin, remember, I am not a financial advisor. This is not financial advice. Just doing the analysis of some stocks that I think are good, potential long-term stocks for me to hold. So I hope you enjoy it. But remember, please, not a financial advisor, not financial advice. Okay, got a quick reminder here for you. Just remember, I have a little spreadsheet in the description below. Whenever I add a stock or talk about a stock on this channel, I'm going to put it in the spreadsheet so you can kind of look back at some of the stocks I've talked about. So, okay, good. Let's go ahead and let's get into this thing. Of course, it's time to play everyone's favorite game on this channel. What's the stock? So when we're going over these mega cap stocks to potentially hold forever, this is how I like to do it. We go through all the fundamentals of the stock and stuff like that. Let's get this thing going. We're going to go through it quickly because we got a decent amount of stocks to go through today. First off, sector. First stock is the tech sector. Industry is communications equipment, and the market cap is $237 billion. So, look, when we're talking about mega cap stocks, there's not a ton of mega cap stocks to choose from. I feel like you could guess some of these. So, in the description below, leave a little comment if you think you know what some of these stocks might be before I reveal them. So, the price of this one is $56.10. The average target price for this is $62.70, which has an upside potential percentage of 11.8%. I think it can, of course, go higher over many years, but this is what's right now more of a short-term 12-month target price type thing. Dividend yield, this does pay a bit of a dividend, actually pretty good dividend, 2.64%. The dividend increased track record, so for over 10 years it's been increasing its dividend. Payout ratio is 59.70%. Pretty good, kind of at the upper echelon I like to see. I don't like to see it much higher than that personally. The dividend 3-year CAGR, so how much they've grown their dividend over 3 years, 26.55%. The F-score, people, if you don't know what F-score is, if you've never watched my video on it, I'll put a link in the description below, but I like to see an F-score of a 7, 8, or a 9. This is a 6. It's okay. I mean, it's not going to make or break it all the time, but I do like to see a higher F-score. PE of 6.8, it's a cheap stock. Forward PE of 8.16, still cheap. Price to sales of 0.59, that's very, very cheap. Price to book of 2.61, and price to free cash flow of 6.01. This is a very cheap stock. If we take a look here at the discounted cash flow, this thing, we have a fair value estimate of 57.36, so this thing is probably around fair value. So, okay, it's time to reveal the stock. Remember, leave a little comment if you think you know what it is, but the stock is Cisco Systems, ticker symbol CSCO. Let's go ahead and take a look at the technical analysis of this stock. All right, I want to just define why I look at the technicals as well as fundamentals here. A lot of people wouldn't do this, but it's something that I do because I do like to see decent setups in the stocks that I'm going to be investing in. I would rather, if I like a stock, I would also like to see a decent looking chart technically. That's just how I am. That's how I prefer to invest, but it's not always necessary. You don't have to have a good looking chart when you go to invest in something if you like the fundamentals of it and you think it's selling for a good price. Okay, out of the way. Cisco Systems sold as high as around $82 way back in the day in the dot-com bubble, let's say. So this thing has never gotten back to these heights before. And so maybe one day it will, but right now what I'm looking at is this thing I think is finally coming back up to this point where it was back in around July of 2019, which is around 58. So now it's coming up to these levels. What I do like about this is above all of its 50, 200, and 100-day moving averages. It's trading above this support line of around $50, and then there's some resistance up here that I don't really like that much. That's in the 58 area. So what needs to happen for me to like this stock at this price right now? It needs to get up into this, let's say, 60 area for me to be happy and think that maybe it's going to break through this support or this resistance area. So if we look up here at this little green box, this is where the analysts are saying the top of this box is where the analysts are expecting the stock to go. That's their targets, around $61, $62. How would I buy this stock? Well, first I would say, well, if it goes down, does it hit maybe this support area and does it take a bounce? Then I like it. Around 50 something dollars, that's good for me. Or does it break through this and maybe go into like the 60 area? Is there volume with it? Then I might like that too. So you know what? Or I just like it and I buy it because I think the stock is good. Let's go to the next stock. Our next stock is in the communication services sector. The industry is internet content and information, and it's got a market cap of a cool 2.04 trillion with a T, giant company. You're going to guess this. Come on, comments below. Write it in there. The price of the stock, $2,869. You can buy it with fractional shares at some different brokers. So you don't have to buy an entire share of this. You can buy a fraction of it if you want to. Average target, $3,279, and the upside potential on this is 14.3%. Dividend, there is none, so skip this slide. F-score of a 7, I like it, 789, happy with the F-score. PE, 39.52, a bit of a high PE on this one. Forward PE is 27.98. Better. Price to sales, 9.24. Price to book, 8.65. So let's go take a look quickly at a DCF. What's going on in this? Is it overvalued? Yeah. According to this DCF I have with a 15% growth rate for 7 years, it is kind of a bit overvalued. It should probably be around 2,100. It's 2,875. Does that mean it's not a buy? Well, you know what? I might wait a bit on this one. But it depends. I mean, you could wait for the stock like this, which you're going to see the name in a second. And so maybe just dollar cost average into this. If it goes down, you buy as it goes down. When it goes up, you buy as it goes up. And you just keep putting money into the stock. What is this stock? Well, it is Alphabet, also known as Google. And by the way, there's 2 different tickers that you can buy for Google. This one I'm going over today is GOOG. On to the technical analysis. What do I like here? What don't I like? Well, I am loving this uptrend channel that's going on right here. It's trading above all of its simple moving averages that I have on here, the 50, 100, and 200 days. What I don't like about this is what's going on in this potential resistance here. So do I think it can break out of it, keep going up in this uptrend line? It's possible. So I don't see anything that's telling me what might be happening next. The RSI is pretty much bland on this one. The MACD is okay. It's not telling me anything much either. So what do I think is going to happen? I don't know on this one, honestly. Anything could happen on this. What I do, I would kind of watch to see if it breaks above this resistance line. Watch for some volume. See if that happens. Maybe this thing's going to go much higher. Maybe it doesn't. Dollar cost average in it. I like the stock, so at the end of the day, not very excited about the chart, but like the stock. Moving on to our third stock today. It is in the financial sector. The industry is insurance, diversified, and a market cap of $698 billion. Now, I don't usually try to find stocks that are in the insurance or financial industry because I'm not that good at figuring out these types of stocks. So I will often just buy an ETF that's maybe a bank ETF or an insurance company ETF or the financial sector ETF. So this one, though, I do like. So you'll see why in a second. The price, $287 per share. The average target, $326 per share, which is an upside potential of 14%. There's no dividend for this stock. And I mean, you got to take a guess on this one because you might be able to get it. F score of an 8, beautiful F score. PE ratio, low, 6.35. Forward of a 19. Price to sales of 2.67. Price to book of 1.38. Price to free cash flow, 22.66. Taking a look at a DCF on this, so fair value is around 246 with, if we took 10 years of growth at 9% growth, is it a little overvalued? Potentially, but of course analysts think it's a bit better than this, so who am I? Maybe I'm totally wrong on this one. I think it's still good, of course, dollar cost averaging into a stock like this over the long term. But what is this stock? You might be asking yourself, well, this is Berkshire Hathaway, or the B shares of Berkshire Hathaway, because the A shares of Berkshire Hathaway are in the hundreds of thousands of dollars. I think it's like $400,000 a share. So I put, of course, the one that's affordable on this. If you can afford Berkshire Hathaway A, go ahead, maybe that one's the one for you. I'm throwing in the B here. Let's take a look at the chart. So of course, I'm sure you know Berkshire Hathaway is Warren Buffett's company, and I'm sure he would think that I'm an idiot for looking at the technicals on this because, he's a long-term kind of buy and hold investor who does valuations, fundamentals. I'm sure he doesn't care about this stuff, but I kind of do. So what do I see here? Well, I see an uptrend channel that this stock is now not trading in anymore. It does look like it is trading sideways, consolidating here, kind of going just in a sideways direction. There's a couple points where it's hit the resistance area at around $291. It's got some support down here at $272. What would I do on this one? Well, first off, it's trading above its moving averages. The RSI isn't telling me much, and the MACD is totally okay. So what do I say on this one? Well, if I was going to try to only buy it at a certain time, maybe when I like what's going on technically with this thing, I would watch it to see if it falls down here into this support area, and then if it did have a bounce off of support, that's where I would buy it. A bit overvalued, probably. This is the analyst targets on here. They have it going up to 325. Of course, I showed you my DCF, and I think it's probably worth a little bit less, but this is what the analysts are saying. So if it does get above this little area here of 291, I got a Fibonacci retracement at 304, and then I got another Fibonacci retracement at 325. That's as high as it might go in the potential near term. All right, moving on to our fourth stock. Is this the fourth stock? I think it's the fourth stock. Moving on to the fourth stock. We have a stock in the communication services sector. What is going on with my screen here? Sorry, that's a mistake. The industry is internet content and information, and the market cap is $881 billion. What do you think it is? Leave a little comment. Let me know what you think. Price, $330 per share. Average target, 402. Upside potential, 24%. This has the best upside potential, I think, of the stocks I'm going over today, according to analysts. Dividend yield, nada. Let's move on. F score of a 6. This has a lower F score than I love, but it's totally fine. It's a 6. It's not going to be a deal breaker for me on this stock. PE of 23.13. Forward PE of 22.2. Price to sales, 7.85. Price to book, 6.83. And price to free cash flow of 24.62. The stock is a medium expensive stock, nothing crazy. I'm not saying it's like crazy multiples, so it's within my range of feeling okay about the price of the multiples. Taking a look at the discounted cash flow here using a free cash flow, 7 years, growth rate of 15% over that time, and then the terminal value here, we got $307 what it's worth. It's trading at $329, so not exactly where you would think it would be. Of course, the analysts think it should be higher. So who am I to say? Maybe this thing can go higher than this. So again, dollar cost averaging into this thing over the long term could be a good job. What is the stock? Well, it's none other than Meta Platforms, or as you might know it, Facebook. Now, what happened? Well, they changed their name recently, just a few days ago. Facebook is now called Meta. Let's take a look at the chart. So for this one, it wasn't an uptrend, definitely now in a downtrend. What's going on here? I see a little bit of potential support here in the $301 area. It's possible that this thing bounces here. This is where I would love to see the stock if I saw a bounce. Up in this area, I would say maybe in the $305 $305 up to $308 range. If there was a bounce with some volume, then I'm liking this stock going up here, back up into a potential Fibonacci retracement, which is around 368, or even to what would be the resistance area of 384. RSI looks pretty good to me, actually. It's on the up here, not overbought, not oversold. So I like this here. So metaverse, Facebook, whatever it's called these days, I think it's a good company to own for a long time. And guess what? We have yet another stock today. This one is consumer cyclical sector. The industry is internet retail, and the market cap $1.75 trillion. Giant company, and I think you'll probably get this one. Comment below. Price $3,372. Average target price $4,102, and an upside potential of 22% for this one. There is no dividend, so skipping this one. The F-score of this thing is a 7. I love it. Of course, 7, 8, or 9. I like that. PE of 58.77. It is a high PE, so I think it's justified. I do. I think this company can grow its cash flows over many years. Forward PE of 59, price to sales of 3.94, price to book 14.18, and a price to free cash flow of 240. Whoa, what's going on there? So their price to free cash flow is really high. Their free cash flow last year, this is coming off, I think, of the trailing 12 months. So anyway, don't worry about that one. What is this from a DCF standpoint? Well, this one's a hard one to figure out, this stock. So we have a free cash flow based DCF. With what I did was actually use last year's 2020's free cash flow. By the way, of course, it seems that it's overvalued on this thing by a lot, 100%, right? So that's not good. But okay, what is the stock? Well, the stock is Amazon. So I'm sure you know Amazon is taking over the world. They're everywhere. They grow free cash flow great. Operating cash flow is great. We're going to look at all of the growth rates in a second of all of these companies we're talking about. Let's go to the chart real quick, though. From a chart perspective, Amazon isn't showing me anything great looking right now, so nothing glaringly terrible, I guess. But what do we have here? Well, we had a nice uptrend, and honestly, a long consolidation up in this area. This thing is still sitting in here, consolidated. It is trading right in the area of its moving averages, the 50, 100, and 200 day. Actually, I think it's currently below them all. That's not a good sign. It's below this trend line, so that's not a good sign. It gapped down back in August. It bounced off of this support area, bounced off again. So I don't know what's going to happen on this one. Again, maybe dollar cost averaging on this thing would be good over a long period of time. I think if it goes down a lot, that's good. You're going to have a stock for a cheaper price that has a lot of prospects in the future. If it goes up, great, it goes up as well. By the way, RSI, nothing really going on here, declining a bit, and MACD, nothing as well. So next up, let's take a look at some growth rates and compare all of these stocks together with my spreadsheet. So here we have my spreadsheet. I made this spreadsheet really to compare stocks to each other, but of course these stocks are not in the same industry, so they're not going to be very comparable in the sense of what are their growth rates and things like that, but I think it's very good to see what's going on by comparing them together. So let's take a look at the broad picture of everything. First off, PE ratios versus the 5-year average PE ratios. Things I always like to see. What's going on here? Facebook is below its 5-year. Amazon is below its 5-year. Cisco is below its 5-year. Alphabet is below its 5-year. Those are all good signs, in my opinion, meaning there potentially could be multiple expansion here. Could be another positive for some of these stocks. Another thing I really like to see in the spreadsheet is what's going on with dilution. So what you don't want is companies diluting your shares unless maybe they're crazy growth companies and they can justify it. Likely that's never a great thing, honestly, but sometimes a company can justify it. Are these companies diluting you? Well, let's see. So Facebook has actually bought shares back. So Facebook shares are decreasing by 1.26%, so not a lot, but a very small amount. Amazon slightly diluting the stock price. Nothing crazy, but I don't love to see it. Cisco is buying shares back. That's great. So I like that. Amazon also negative 1.72%. I like that. what are some ways shareholders can make money? Well, you can have your shares decreased, meaning that you own more of the pie, more of the earnings of the company. That's a way. You could have dividends. So of course, only one of these companies pays a dividend. That is Cisco. And then finally, I just do like to see growth rates. So what's going on with the growth rates of a lot of these? Well, some of these are really good. Cisco is not as much of a growth stock as these other ones, but they're all growing revenue minus Cisco by very nice amounts. Gross profits growing, operating income's growing, earnings per share growing for almost all of these. It is growing for all of these. What's going on with cash flows? Well, cash flows from operations, I always like to see that. Definitely an important part of the cash flow statement. All of them have pretty good growth. Cisco, of course, not as much growth, but a little pretty much flat on the 3-year cash flow from operations. Moving down to free cash flow in general. What's going on over the 10-year CAGR or compound annual growth rate of the free cash flow? Well, 50% for Facebook, that's nuts. Amazon, 28%, Cisco, 5.2%, and Alphabet is 19.80%. These stocks are growth stocks. They can grow cash flows. They can reinvest in their company. They can do great things potentially down the road. So the strong companies, they have a lot of potential. So some of these companies may be good to hold forever. So that's all I have for this video. I hope some of these ideas you liked. I hope you enjoyed some of the analysis in this. So hit that like button if you did. Subscribe if you want to see future content like this. And you know what? I got some other videos. They're coming up on the end screen. Why don't you click that right now?